Hey everyone, welcome to today's video. We're going to talk about the stock to flow ratio of Bitcoin. Is it really that good or is it flawed? Cue the new intro. So welcome everyone, I hope you enjoy the new intro. Let me know if you do. Like, comment, subscribe, hit the bell button. Also, I have a new Instagram graphic. I also have a new Instagram account. It's brand new. I've only got about 75 followers on it. I've not really pushed it yet. I will be doing lives on it. I will be doing like cool little story content. I will be doing all kinds of thoughts, opinions, facts, all kinds of shite on there. Please do give me a follow to see that sort of stuff. Likewise, also follow me on Twitter. I do all kinds of stuff. Now, this video is not bearish. I do apologise if it comes across bearish. It's not. It's kind of a bit of realism to kind of put thought process or common sense in terms of price valuations of Bitcoin. My honest viewpoint, not personal advice. Literally, honestly, trust me, I hold Bitcoin. There we go, happy days. But I'm not getting too excited overall. Now, how does this work? This is based off the scarcity number of Bitcoin coming into the industry as per the supply. Simple as that, really. So the only asset realistically in the world that we've got, in my view, is absolute scarcity is Bitcoin. We know there's only a fixed amount. We know how much is kind of pretty much lost. We know what's coming out every 4 years in terms of the changes in the code. We're a bit off though on this, in my opinion. I think people get too excited. Now you've got to ask yourself a few questions, and I'll come on to those questions in a minute about investing. But first off, if this is the first time you've ever seen this, Google it, have a little look. You can do some real in-depth sort of economic analysis over stock to flow ratios of history of silver, gold, etc. But it also works with Bitcoin for now. I think it's flawed though. I don't think it will work as well as we expect it in the future. Long term, I think it may be a bit different if there is no demand. And I'm going to talk about demand in a bit. But talk about this article here. This is interesting. This was wrote last year. Now, obviously that's a top highlight there. And I'll come on to that in a second because that's kind of relevant to today. But the prediction, or the predicted, market valuation for Bitcoin in May 2020, it's currently May 2020, after the halving is $1 trillion, which translates to roughly $55,000 per Bitcoin. This is quite spectacular, obviously it's written. I guess time will tell. We will probably know 1 or 2 years after the halving. So that was what was a prediction. That was what the model was saying. We failed massively on that one. So that's one point to make a note of. It is a very, very lagging indicator. Now, the highlight comment, this is where it gets interesting. People ask me where all the money is needed for the $1 trillion Bitcoin market value would come from. My answer would be silver, gold, countries with negative interest rates coming up, countries with predatory governments, etc. Obviously already happening and happened. Billionaires, millionaires hedging against a quantum easing, and institutional investor discovering the best, well, obviously the best performing asset. I got a big flaw with that. Obviously, a lot of that's true. Yeah, get it. But institutional investors, not hit them yet. My viewpoint, we've had a little bit of a nibble, a little taster. Obviously, who's came into the market recently in terms of hedge funds, but that's only 3%. It's not enough. Not enough. Nowhere near enough. I personally believe that we're going to come down. I think we're going to have one big drop coming up. Which would allow institutional levels to pop this, to drop it into a good sense of liquidity, and then the liquidity is not at 10k. No institutional investor is going to push this further from buying at 10k. They're not. It's just impossible. FOMO will, but not to the levels that we want it to be. We need a good basis of orders that have been filled lower to create a good stability and less volatility, would you believe, because the liquidity has been filled. When it grows, it'll be more organic, it'll grow nicer, and then it will follow that model with demand and use case. Now, miners, let's talk about those now, because this is interesting too. Roughly, give or take, halving, miners, hash rate, it's all kind of interesting at the moment. We've got to look at that in a bit of fine-grained detail at certain points in the future, but this is an article that was wrote in, I think it was March, and it was on about the rough estimated post-halving cost will be 12,500, assuming the network processes power known as a hash rate stays at current level. it's changed a lot. The halving rate in terms of that, obviously every 4 years. The difficulty adjustment in Bitcoin every 2 weeks. Hash rate kind of follows different sort of cycles as well, based off if the miners are on. Miners have currently turned off a lot of their machines right now, which is kind of interesting. But the difficulty adjustment will be all-time high in the next 2 or 3 days because of the way the cycles are. That is going to create higher costs for mining. They've already lost half their income, their equity in terms of what they're generating. That's a lot of money to lose. If these rates stay high, the difficulty to mine a block will be harder, meaning it'll cost more, meaning it's going to impact their business. So that is a big factor to take into consideration. That again is another lagging indicator. But when you look at the likes of this, yeah, interesting. Very much interesting. Now that article was wrote in roughly March time where it was quite high. Obviously we are dropping, but it also dropped quite significantly in March as well. So be mindful of that. As it said before, it's interesting. Network difficulty, if I put this on here, this is where it gets a little bit interesting. This is roughly at the highs. We're about to reset very, very soon in terms of where it's going to be. So as you can see daily, it's kind of trickling, but this resets every 2 weeks. So whenever you get a 2-week period, it will do a bit of a gap. So be mindful of that, and that's always interesting. So that is one consideration that people are overlooking. What the miners doing? Why are they not selling yet? Why are they still holding on? They might be holding on because difficulty adjustment hasn't reset yet. You've obviously got expiries of CMEs. You've obviously got all kinds of different elements of that as well in terms of when they can release equity to make it better for the market. Now, finally, top experts. I want to talk about something else just after this as well. Top experts, obviously, Pantera Capital, etc., has been saying that Bitcoin would peak potentially $500,000, basically. Let's just say 500,000, which is crazy, right? In literally over a year from now. So my bags, if my bags generate that much as value, I would be out of the space within a jiffy. I would be building my own dream house in a field, away from every fucker in the world. I will be mortgage free. I will have Lamborghinis. I'll have the lot, right? Not even joking. Does that sound too good to be true? Does it sound really big-headed and arrogant? Well, I think, personally, I don't think Bitcoin is ever going to get to those levels, ever. My personal opinion. I do not see it. The reason being, CME futures, I just mentioned it. The previous halvings and stuff like that, and the model was run off that. We've now got futures. We've now got the ability to short the coin. Short the corn, right? That causes issues as well because obviously people compare bearish, you know. That will obviously increase leverage on assets, etc. Obviously gold's done okay, but in my viewpoint, do you reckon gold's suppressed? I think it is. I think gold should be way higher than what it is, but it's not. It's just one of those things. But my personal viewpoint is, now don't quote me on this, but I think 500,000 for Bitcoin is massive. It's huge. It's a monumental number. And you've got to look at this as well. If someone said to you and came up to you in a suit and tie, buy this asset, it's due to go up in August 2020 of the expert stock flow ratio model to $533,000, you'd go, you would, you'd be like, jog on. You would be like, doesn't make sense. But in the Bitcoin community, in the cryptocurrency community, it seems to be okay to put these extravagant numbers out there. That's where my mind kind of goes, okay. Personal opinion. If Bitcoin gets to $50,000, I'll be happy. I'll be very, very happy. I will be unbelievably happy because that would allow me to live without working for about 5 to 6 years on my arse doing nothing. Literally nothing. Going around the world doing whatever the hell I want. That's only to $50,000. That's where the difference is. Living on that hope that it could go up to those levels is interesting. That's where the FOMO comes in. That's where the new people come into the market and get really bitten hard on the arse because they believe all this stuff when in reality there's a little few cons. The cons are the stock flow ratio model is unproven still in Bitcoin. It's too early to tell, far too early to tell. Gold's been around for generations and generations. Bitcoin's been around for 10 seconds in reality. It has. You've also got the cost of mining. Proof of work is incredibly expensive. We have issues in the future with energy costs. How are we going to manage that? We don't know. We've not tackled that. We've not crossed that bridge. Demand as well. If there's no demand for Bitcoin and the miners do knock off due to expense, well, the network's not going to work, is it? that's where the problems lie, and that's what we've got to look at as well. If it looks like Bitcoin is going to burst and it's going to literally come down in price due to demand, the stock flow ratio will fail. That's a problem. If, however, the energy systems have like sorted itself out in terms of how we do difficulty adjustment, how we plan for the future in terms of power and cost, how we can make it profitable for the miners throughout time to last forever, and all the mining sort of elements and the block validations happen correctly as it should, then it may be better. But I still believe that the demand will outweigh what the cost will actually become because of CME futures. But that's my honest viewpoint. I want Bitcoin to be successful, and it already is. It doesn't have to be $500,000 to $1 million per Bitcoin to be successful. It has to work. It does work. That's the difference. Price, in my opinion, should be irrelevant. You should be able to buy low, sell high, but not buy low or even buy high in the hope that you believe and feel because some YouTuber with a snotty nose and a fat head has basically went, it's going to go to 500,000 because this expert said so due to the stock flow ratio. It messes with your mind. One thing as well I want to end on just before I go. If people want interest in the market, altcoins have to succeed and go up in price. That is where, when you look back into history in terms of the old bull runs, that's where the new people, the flooded market came from. People look at Bitcoin and go, oh, it's too expensive. Oh, no thank you. But they'll look at Ethereum at $200 and go, ooh. They'll look at XRP at like 20 cents. Ooh. You know, they'll look at some random shitcoin and go, it's fucking 1 cent. I'm going to buy that because it's going to go up to 20k. They'll do that. So if you want to generate interest, the altcoins have to be successful too. That's where you get the new people in. That's where you get people introduced to Bitcoin, Bitcoin parents, holding Bitcoin, etc., exchanges, all kinds of good stuff. So there you go. New video done. I shall see you again very, very soon. Tomorrow. Hope you enjoy. If you did, leave a like, leave a comment, all kinds of good stuff. And yeah, let's cue the intros and outro. See you later.